Welcome to Place and Experience. Indulge your senses with immersive game titles. Boost the excitement with our engagement. Welcome to Place and Experience. Indulge your senses with immersive game titles. Boost the excitement with our engaging promotional tools and generous network promotions. Be in control with XI Viewport Management Tool and experience seamless gameplay powered by X Platform. Enjoy Place and Experience as our partners do in over 20 regulated markets. And get ready to go big. Big play is on. Placent.
Well, there you have it, and welcome back one and all to another edition of your Next.io weekly news, where we bring you the biggest headlines of the week, whether you want them or not. I'm joined, as usual, by my fabulous partner in crime, the one and only Mr. Nico Jansen. Nico, welcome back. Thanks for being here. How are you?
Yeah, first of all, thanks for having me, right? It seems like this is a phrase which each and everybody always needs to come up with. First of all, thank you for having me. But most important, like always, thanks and shout out to the audience for actually listening to us, valuing whatever information we're giving to them. And life would not be the same if we, the both of us, wouldn't do it for you.
Quite right, yes. They must be gluttons for punishment, some of our audience, because I don't know why anyone would want to listen to us rambling on every week. But for me, Nico, it's the highlight of the week. We've got lots to discuss today. We've got a little bit of an affiliate special, you could say, because we've had two pretty big stories in the affiliate sector. We're going to look at XLMedia first and Catena Media in just a few minutes. We've also got a little bit of potential IPO news, pretty exciting, but we'll save that for the end, Nico. Before we get into your 10 in 5, let's just take a moment to reflect. The leaves are starting to turn. It's all gone orange outside the window here. We're marching on towards autumn. And of course, Nico, that can only mean one thing. That means in about 2 or 2.5 weeks, you and I will be heading over to the beautiful Mediterranean jewel of Malta to go to a little-known industry trade show and maybe do a bit of networking, a bit of partying, if we're lucky, maybe a little bit of this and a little bit of that. Are you looking forward to your trip, Nico? I hope to see you there.
Yeah, first of all, you will see me there. So we already agreed on, handing out autographs and just, being two guys, which each and everybody could just grab, take out for a talk and just challenge us. So always feel free to actually approach us and talk to us. We don't bite. We are quite nice to each and everybody, and we always value feedback. So it's not a rumor going around that the German and the English guy are two some gruesomes. And just looking forward to it, mate. It will be a lot of fun. We will let the island shine just a little bit more.
Yes, it will shine just a little bit brighter with us there, Nico. You're right. Why don't you let us know in the comments if you're going to be at Sigma in a few weeks, and maybe we can make plans to meet up for a beer, especially if you're buying, because we do like to receive tips, don't we, Nico? You can always count on our audience to come through with a couple of beers at the end of the day. Now, like I say, we've got some big stories to dive into, so I won't delay us anymore. But before we get onto our main stories of the week, of course, it just wouldn't be weekly news without the one and only Nico Jansen's special feature. It is, of course, the 10 in 5. Nico, are you ready?
Yes, I'm ready. Born ready like any other week as well. And starting off with France looks to legalize online casino in 2025. France is moving closer to legalizing online casinos, with Prime Minister Michel Barnier's government introducing a proposal as part of the country's 25 budget plan. If approved, the new regulation would see online gaming operations taxed at 55.6% of their turnover. Legalizing and regulating online casino could help curb this activity while providing an estimated 1 billion euros in tax revenue to the state. So this is always quite interesting, especially as all the companies running the operations are getting the smaller piece of the pie. Why? The government takes it all, but we will see. Giving it from the rich and handing it out to the poor, like people, like the modern Robin Hood states. But moving on, as Evolution, so Swedish Pride, are being hit by the Georgian strike and Asian cyber attacks. Evolution reported a total operating revenue for Q3 2024 of 579 million euros, which represents a 27.9% year-on-year, up year-on-year, and the net revenue increased by 14.7% to 519.4. And Evolution's EBITDA jumped 30.3% to 450.3 million, resulting in a margin, and this is just mind-blowing, still of 71.7%. And the CEO, Martin Carlesund, acknowledged the impact of two external factors that had a negative impact on the quarter: a labor strike in Georgia, which we covered quite often during our news, and increased cyber attacks in Asia. And he states, we expect margins to remain around the same level for the final quarter of the year, and therefore we expect to complete the year slightly below our expectation from the beginning of 2024 of full year EBITDA margin in the 69 up to 71% range, which is, as said, just mind-blowing. And then heading over to Australia, as Star is fined with 15 million Australian dollars, and the license is suspended after the second Bell report. The NSW, Independent Casino Commission, shortly NICC, will fine Star Entertainment Group with 15 million Australian dollars, which is equivalent to 9 million euros for the failings raised to the second Bell report. For now, the license will remain suspended pending the completion of transformation actions, with the NICC set to reassess Star's suitability by 31st of March 2025. The company said in an ASX release The group will continue to engage constructively with the NICC in respect to the Star Sydney and its operation, while its license remains suspended, including regarding the directions above and the proposed amendments for the Star Sydney's license conditions. Heading over to Curaçao's license holder, Cyberlark declared bankruptcy. Cyberlark NV, one of the 4 historic Curaçao gaming master license holders, was bankrupt in court on last week Friday, 18th of October. While Cyberlark's license expired by 1st of October as part of the Iceland's set of online gambling reforms in the LOK legislations, its previous sub-licensees were grandfathered into the new licensing systems. So will be quite interesting to see how this filing for bankruptcy will affect their operations as well. Now heading over to the US, where the 2 heavyweights sued and countersued each other as DraftKings and Fanatics VIP chief near settlement after bitter dispute. DraftKings and the former executive who left the lead Fanatics VIP team are close to a settlement after a bitter non-compete dispute. So we already covered this news quite often as well. It all started with Michael Hermelin leaving DraftKings, joining Fanatics, and then there had been sues and countersues ongoing. According to the court documents filed in Massachusetts District Court, DraftKings and Fanatics, betting and gaming presidents of VIP, Michael Hermelin, are negotiating a potential resolution to the lawsuit. So there might be a final end to this one as well. Still staying in the US, last week we already covered a casino project as well. Now it's a rally planned in favor of New York's Hudson Yards casino project. Just remember, last time we talked about the Times Square casino project. Now we're talking about the Hudson Yards casino project. On 21st of October, the head of New York's Building and Construction Trades Union announced a rally in support of the plan to developer-related companies and win resorts for, and listen, a $12 billion project for casino, office, and housing complex at Hudson Yards. His name is La Barbara, president of the Building and Construction Trades Council of Greater New York. He wrote a letter to his union affiliates, and he wrote, "We appreciate the experience of the High Line." If you've ever been to New York High Line, it's quite interesting, a very walkable area with nice views. It's a living area in New York, and if you ever be in New York, coming over for next IO, the New York Summit, we are pretty close to the High Line as well. So getting back to the letter, however, we cannot let the fact that a new building may create new shadows prevent our city from moving forward. We live in a vertical city. We must continue to build. We must continue creating opportunities for our city's residents, including residents of this community, to earn a middle-class lifestyle. We must raise our voices and be heard. So it will be ongoing each and everywhere in New York as soon as it comes to these casino projects. Then an update on Kindred's share of revenue from high-risk players, which is up to 3.2%. In the third quarter, there was an increase in the share of gross winnings revenue from high-risk players, with the percentage reaching 3.2%. And this is up from Q2 2024, where it was set at 3%. This was slightly better than last year, though, when the percentage in Q3 was 3.3%. And Kindred head of responsible gambling, Esther Sheeper, said the general awareness and knowledge around gambling disorder is increasing rapidly, as is the sophistication of technologies support tools. We are currently upgrading our detection system with a new improved system, which will enable us to integrate more robust compliance features and optimize our overall approach to safer gambling. So once again, shout out to Kindred with the journey to zero. And if you just follow the news quite often, you will just see that they float around the 3.1, 3.3%. But they are just doing their actual best to actually lower it. Heading over to Europe, as the KSA hits WinBet with weekly penalty for unlicensed gambling. The regulator, KSA, found that WinBet operated illegal gambling services through 4 websites, namely GalaxySpins.com, WinnerCasino1.bet, Super1.bet, and DrSpins.com. And WinBet's violation of this rule led to a penalty of 280,000 euros per week, with a maximum fine of 840,000 as well. 2 more to go, as online gambling in Finland regulated market could launch earlier than expected. As you are all well aware, Finland is one of the only countries where we don't have any regulation in Europe. The planned opening of a competitive regulated online gambling market in Finland had been put back from 2026 to 2027, but it appears that an earlier launch may be possible again. A cross-party steering committee was reviewing the proposed legislation this week with an eye to submitting it to the European Commission for review next month. If that goes ahead as expected, it could feasibly receive approval from the EC by the middle of next year, which would also lower or would decrease the overall opening for any gaming companies even earlier than 2026. And last but not least, the Los Angeles Rams launched next-gen stats-powered in-stadium highlights through new collaboration with Genius Sports. And now, during every Rams home game, immersive highlights leveraging the NFL's proprietary next-gen stats, shortly NGS, data will be displayed on Sophie's Stadium iconic infinity screen. If you did not yet see it, look it up, how huge this screen inside the stadium is. And these highlights, powered by Genius IQ, Genius Sports, next generation data and artificial intelligence, will include crucial insights such as player locators and speeds, time for the quarterback to throw, and a complete minimap. So if you are looking for distraction from the game, I'm pretty sure just look at the screen and you will just see data while enjoying your French fries and all the healthy food which is served in all the American stadiums.
Fabulous, Nico. It's not like back home in Germany where you get a bratwurst with your football match, or like here in England where you get a chicken balti pie. No, it's all French fries and hot dogs. Get your hot dogs. All right. Let me give you the opportunity to rest your voice a while, Nico. That was fabulously done. As always, it's like sitting here with Jeremy Paxman or one of the other great newsreaders of our times. Very, very good work. But we must move on to our first main story of the week, I should say, which is all about XLMedia. You might have seen this in the headlines this week. What's happening? Well, quite possibly, Nico, XLMedia is no more because it's entered into a conditional agreement to sell its North American business assets to who? Sportradar, the sports technology odds providing data type sports company. So that's a bit odd, isn't it? Under the terms of this agreement, Sportradar will pay $20 million upon completion of the sale, and there's an additional $10 million earnout contingent on the performance of XLMedia's assets by April 2025. So actually, pretty short period. It's probably only got like a 6-month period to get that earnout, which is pretty quick. Sometimes these things are built over years and years. Pretty short period, this. Anyway, this transaction is subject to a shareholder approval at a general meeting on the 7th of November, so coming up in about 2 weeks, and it is expected to be finalized shortly thereafter. Now, just looking at the numbers briefly, the acquisition reflects a multiple of about 5.5 times the division's 2023 full year EBITDA, with the total deal valuing XLMedia's North American assets at up to 8.8p per share. So why do I say XLMedia is no more? Well, if this is approved, Nico, these are the last remaining assets that XLMedia holds. It used to be quite a big voice in the affiliate sector. It was kind of a leading company, but it will become a cash shell listed on the stock exchange, which means on the London Stock Exchange, I should say. So it's going to have no more assets. It'll just be holding onto that money, which will then be distributed back to its shareholders. Now, XLMedia's decision to divest its North American assets follows, you may remember, a strategic review by the board, which found that the value of XLMedia's individual business segments was not fully reflected in its share price. So earlier this year, you'll remember that it sold its European and Canadian assets to Gambling.com Group, and that was a deal worth up to $42.5 million. And if we look back at when XLMedia presented its full year 2023 results back in May, Chairman Marcus Rich said that the company had already received interest in its US assets, especially after the announcement of the European sale. So this week we got an update, and the business said that the growth, quote, the growth of its US revenue streams did not match its original plans. So even though it had put some effort into expanding its North American division, wanted to develop its key partnerships with big US operators, it struggled to scale in that very highly competitive market. So just to give you an idea of the figures, Nico, 2023 full year in North America, XLMedia generated $27.5 million in revenue and $5.5 million in adjusted EBITDA. So not a tiny insignificant business, but hardly reflects the scale of the actual market over there. So obviously some work still to be done to optimize those assets that it does have. Now, we got a bit more commentary on this week from XLMedia, who said that over the past few years, its board, management, and staff have worked to integrate 3 acquired entities and establish a strong presence in North America. However, it said that its obligation to fund these acquisitions using trading cash, particularly in a high-value market, limited its ability to pursue further acquisitions. So I think that's why it was struggling to scale. It couldn't get the cash together to buy any more businesses. And I think we've seen, Nico, over the past few years, you look at Gambling.com, Better Collective, you know, we can see that a lot of the real turbocharged growth in the affiliate sector does come from acquisitions and consolidation, rather than this kind of building new brands up from nothing. So if you can't acquire businesses, you kind of struggle to be a big player in that market sector. Where are we? So the board said that it considers Sportradar's offer to be a fair net present value for the standalone North America's businesses' future revenue and profitability. So yeah, they've obviously determined that this is fair enough. I just want to look at the actual whole value of this and some of the numbers from where this came from. So basically, if this deal is approved, then together with the European and Canadian sale earlier this year, so there's still earnouts that we're waiting on from them, but the total amount could reach $72.5 million. Now, based on the current number of shares in XLMedia, that would mean a potential value of up to 21.2p per share. If you compare that to the price of the whole business when it was listed on the, not when it was listed, but the share price of the business when it was still all together, back when they first announced the review in December 2023, shares were 6.6p. So they've managed to get a value of about 3 times that, potentially, if they get the earnouts. So there's a bit of background and a bit of an explanation about the rationale behind this, Nico. There's a couple of things I want to talk to you about. First of all, bit of a left field move for Sportradar, which is not, as I understand it, an affiliate business, but it does have some media elements, I guess. And second of all, do you think this was a good value deal all round, you know, both for XLMedia shareholders and for Sportradar? What's your take?
So first of all, Sportradar has always been, and now no doubt about it, a statistics only, so B2B operations. They first of all never, although they are providing, have always been providing like an odds feed, but they never ever came up with a solution of a standalone betting software. It was just not their type of business. So it has been statistics, odds provider all the way. So based on this one, it just, was quite new that they are actually now getting into the affiliate game, right? Because you just acquire things if you just want to, maximize profit. It seems like they will be using, just a guess from my end, their existing statistics, and they will feed an affiliate website or different affiliate websites and get the word out there. So this might be their approach of actually getting into the affiliate game, which of course XLMedia has not been able to do, as they did not have access to the statistics directly, like BetRadar, Sportradar obviously has. They are providing and exclusively getting the statistics from the NBA, while Genius Sports is on the other hand just providing the statistics and feeds for the NFL and NFL games. So we will just see how this one turns out. But one thing is for sure, besides XLMedia and also Catena Media, the big affiliate sites and networks are actually moving out of the US. We see operators leaving the US. For example, Betson. And if you just want to re-listen to this episode, I highly recommend the episode when Pierre Lynn just sat down with Betson, and they discussed why Betson never fell for the US opportunity. As said, just re-listen this episode. You will learn a lot, and this is how it actually turns out. Obviously, and as of now, only DraftKings and FanDuels have been able to actually implement their affiliate tool, which is the underlying daily fantasy sports network. And besides this one, nobody actually up till now cracked the code of running a very good affiliate business in the US. But maybe Sportradar will now finally come up with a solution. So this is my take on this topic.
Yeah, fair enough. I guess in the US, there's a bit less call for affiliates, given that there's about 3 or 4 serious players in the market, and everybody else is kind of this long tail of basically tiny little operations that can't really keep up in terms of product. So, if you go to an affiliate site in the US, what's it supposed to say? Well, it's DraftKings off FanDuel. And if you live in the US, you already know that because the TV's full of adverts for these things all the time. So unlike here in the UK, where we have a million licensees and loads of different options, it's just not that diverse a market at the moment. So I guess it kind of makes sense. So 5.5 times EBITDA multiple, Nico. I think that's pretty low. I think in terms of some of these acquisitions go much higher multiples than that, 9, 10, 11 times. Or am I wrong? Do you think that's pretty good value?
That's pretty good value. That's pretty good value, because always remember, it's already a big numbers game. Of course, you have a multiple, which is even higher, but then the EBITDA ranks in between 200 or 500,000 euros, and then even with a multiplier of 10 times or 12 times, you end up with 5 million or 6 million. But here we are talking about an acquisition of 20 million plus. With the earnout model, it can reach up to 30 million dollars. And as said, this is a big numbers game. Compare this one to the Cafe Rocks, which has also been sold as well. And if I'm not mistaken, the anticipated price was also an EBITDA multiplier with 4 up to 7 times. If I'm not mistaken, the actual sell price has never been released, but I'm pretty sure, with the Cafe Rocks, also this one ranks in between 4 until up to 7 times the EBITDA.
Yeah. Very nice. Okay, I think that's pretty much all we've got. Obviously, if you want to see this full story, you just need to scan the QR code in the corner. But we are going to move swiftly on to our next affiliate story of the week, which is all about Catena Media. But before we do, I believe we have just a very brief video message to share from one of our partners.
Games, hundreds of studios, dozens of hub market partners, and in tens of thousands of games, hundreds of studios, dozens of hub market partners, an industry-leading hub wallet, and just one API. Hub 88 is connecting businesses to a world of limitless content where the possibilities are endless. Hub 88.
Well, there you have it. And thanks once again, Nico, to Hub 88 and to Playson for supporting us and keeping us coming back here every week. Now, as promised, we are going to look at the latest from Catena Media. Let's say not the happiest of news stories we've had from them this week. Nico, I know you've been looking into this one. Do you want to give us the details?
Yeah, for sure. So first of all, there have, I don't know when it was the last time when we actually got nice news or positive news from Catena Media as well. But just let me walk each and everybody through that topic a little bit. As Catena Media cuts jobs and expects the revenue to drop at least 30% in Q3. Catena Media revealed today, which was Wednesday, the 23rd of October, that it's implementing new cost-cutting measures, including the elimination of 29 positions in its content production and marketing teams in response to an anticipated 30% drop in Q3 2024 revenue. So once again, like we did as well, if you are looking for employees working in the marketing and content production teams, I'm pretty sure you will find people who are looking for a job, at least 29 of those who are highly committed. So once again, just take a look. So the restructuring is set to take effect on the 1st of November and is part of a broader effort to align the company's operations with its product development goals, focusing on a smaller set of flagship products. So there, while other companies are broadening and diversifying their portfolio, they're just, focusing their portfolio. And Catena Media expects to save 2.2 million annually as a result of redundancies, with a severance cost totaling 400,000 euros. The change is part of a wider plan to boost revenue generation through enhanced investments in marketing, search engine optimization, so SEO, and technology. And they also issued a profit warning as well. With news of the layoffs came as the company shared its preliminary Q3 results, revealing revenue between 10.5 and 11 million euros, which is down from roughly 16 million euros in Q3 2023. And the adjusted EBITDA is also expected to fall significantly, ranging from 1 million to 1.5 million compared to 3.2 million last year's, with margins shrinking to 10 to 14%. which is a sharp decline from the previous 20%. So just keep in mind, and also during the 10 and 5, we just talked about the EBITDA margin of Evolution, which is expected to rank in between 69 and 71%. So this is, although it's an affiliate business and not the peer group of Evolution, as said, it's one of a kind. But there you just actually see how crazy an EBITDA margin of roughly 70% actually is. And then additionally, Catena Media reported a 40 million non-cash impairment, largely due to a write-down of certain sports betting assets. So this just means that they reevaluated their sports betting assets, and it seems like within their own books, they just have a higher volume, higher value, and they just decrease this value by a total of 40 million, which is a significant decrease in value as well. This follows the company's recent shift towards a new product operating model, which focuses on core brands and moves away from underperforming non-core products. According to the CEO, Manuel Stan, the company has been operating at a loss in its sports betting segment for an extended period, which prompted the decision to focus on products that show better long-term value potential. And now I'm reading out a quote which reads as follows: "We have responded to market challenges by shifting resources away from loss-making products and into those we believe have the best potential to generate long-term value. I believe that this strategy will position us for success in the coming quarters. Although the figures reported today do not yet show the improvement, we see positive signals from the changes we have made in recent months, such as leaner cost base and improved search rankings, and we remain on course to achieve our objectives." And just recall, Catena really revealed an aggressive program of improvement measures following the release of its Q1 results in May. And just remember, on February 26, also in the Q1 of this year, Catena Media announced that Michael Daly steps down as their CEO. So besides actually focusing their business, selling off assets in the US as well, they also shifted their C-levels as well, with Michael Daly being replaced by Manuel Stan. And those included a product-focused operating models, more focused on fewer high-value products, and the introduction of new technical platform to bring all of Catena Media's activities together into a coherent technical architecture. And this just leads to one and only and it's self-repeating question: is Catena Media an acquisition target? What's your thought, my dear host, Connor?
Yeah, well, first thing to say, obviously, is to just to offer some solidarity to those workers who are impacted by this 29 roles being made redundant. And as you say, if anybody's looking for people with experience in content and marketing within the iGaming affiliate sector, well, it's worth looking into who's been let go from Catena. I hope, I think, we had a similar story from Rivalry in Canada a few weeks ago, and they've been through a couple of rounds of redundancies, which is never nice. But one thing I think they got right is that with permission from those employees, they've published their details online so that prospective employers can get in touch. And I hope that Catena will do the same, because it's never easy to go through something like that. So shout out to anybody affected by that. And of course, if you are hiring, then it's somewhere that you should be looking. Now, in terms of whether it's an acquisition target, Nico, I'm not sure, actually. I may have furnished our producer with a stock chart showing Catena's share price over the past few years. And as if by magic, there it appears. So if you look at the peak in 2018, May 2018, the share price is over 145 Swedish krona per share. That's over 145. Today, shares are trading for 5 Swedish krona. So the value of this business, and thanks Lorena for showing that, the value of this business in the last 5 to sort of 6 years, Nico, has pretty much absolutely collapsed. Now, obviously, some investors and some businesses are keen to take on what you might call distressed assets like that, and obviously it does present an opportunity for, you know, maybe a really good value acquisition. That is to say, can you get this for pennies on the dollar? But I'm just going to look up quickly the market cap of the business, which I think is about, so it's about 400 million krona, which I'm going to work out what that is in euros, just so we can get an idea. The market cap is something like, 35 million euros at the moment, which actually, if you look at the EBITDA figures from Q3, you know, EBITDA's expected to slip to between 1 and 1.5 million euros. So that suggests kind of full year EBITDA of maybe 4, maybe 6 million, maybe 10 if the other quarters were much better. But it means that it's kind of trading at still probably quite a high multiple for a business which is in distress. I can imagine these shares to continue going down, Nico. I think the question is who would be the buyer, but actually we've had a bit of a surprise this week with XLMedia, and to say that Sportradar are now going into the affiliate space, well, maybe they're looking to buy up as many assets as they can. Of course, the one biggest buyer in this sector is Better Collective, and I remember the days when Better Collective and Catena Media were kind of equivalent competitors. You know, they were in like a battle of equals at the time. This is maybe 2018, back when Catena was riding a high. So obviously the business has been through a lot of a lot of trouble since then. I think it also depends what kind of markets you want to focus on. I understand Catena's still pretty big in Japan, which is not always a super focused area for a lot of affiliates in the sector. I think it's kind of unique in that sense, in being a Western company which is publicly listed and has that focus on Japan. So if anybody was looking to get some assets in that market, maybe, Nico, I mean, if you had 35 million euros to spend, would you buy it?
First of all, I would just buy your Bugatti. Starting with this one, right? No. But getting back also to the charts which you've actually showed. First of all, we should not forget that Catena Media already sold lots of their assets, starting with Ask Gamblers, which was one of their biggest assets for roughly 47 million euros. Then they exited Italy as well, when they actually sold off their super scomies to odds checker as well, and they also offloaded the UK and Australia business for 6 million as well. So first of all, everybody knows that rumors of Better Collective eyeing on buying Catena Media had been ongoing for like all the time. I'm pretty sure they already eyed on Catena Media, and you will never ever get an official statement by anyone from Better Collective that they actually did a due diligence. But one thing is for sure: what kind of assets are still within the reach and the company structure of Catena Media? This one, so as said, when they peaked with their share price, which is 30 times the share price which we're seeing now, but also like the big businesses have been offloaded. I just named roughly 4 markets which they exited as well. So it will be quite interesting if they will actually turn the ship around, or if they will continue to offload businesses, and please shareholders with dividends, or what's the long-term strategy for Catena Media? It's just me just guessing, but I don't know where this ship will steer if you actually offload your revenue-driving entities and assets. I have no clue where it might lead.
Yeah, well, we've got to give Manuel Stan a chance. He's pretty new to the business, and obviously there's been some kind of strategic review, and like you say, at a time when lots of companies are out there trying to do as many things as possible and really broaden their portfolio, Catena has taken the opposite approach and said, no, we're going to focus on a couple of high-value assets. Well, let's see. These were just preliminary results, Nico, so we'll get the official numbers in the next few weeks. So we might come back to this one and see where in the world Catena is still able to generate revenue. But yes, not the most positive success story, unfortunately, this week for Catena. So we will keep an eye on that. And once again, shout out to everybody affected in the redundancies taking place there. Now we're on to slightly more positive news and something that's potentially quite exciting, Nico, which is the potential for a new IPO in the gambling sector. We haven't seen many of those in recent years, but Australian social betting platform Dabble is reportedly considering an initial public offering as part of its ambitious growth strategy. According to an article first published in The Australian, I think it was last Friday, just after we just missed it because we do our weekly news on Thursday, Dabble is considering listing either on the Nasdaq or on the Australian Securities Exchange, ASX, with the intention of generating returns for its shareholders. Now, Next.io and my colleagues have seen a shareholder document where Dabble management said it is collaborating both with Australian and US advisors to assess its various IPO options. So John Robin, who's the co-founder and executive director, told investors that early feedback indicates Dabble could be a promising IPO prospect. He said, and I quote, "The Nasdaq is the most natural exchange for Dabble to consider, being the home of a large portion of global high-growth consumer technology businesses like us." But he did add that the ASX is also being considered. I saw some data. I think this is disputed by some people, but I think you do tend to see slightly more generous valuations in the US and on the Nasdaq compared to, let's say, London or Australia. So, and also the Nasdaq is tech heavy, as they say. So it does kind of make sense. Now, just to give you a bit of background, Nico, Dabble was founded in 2020. It's got some pretty serious investors like YOLO Investments and Tabcorp behind it. And it operates on a social betting model, which enables users to follow and replicate the bets of friends and influencers, and has garnered significant interest among younger audiences. Listeners will be relieved to hear that I'm not on Dabble, because the one thing you don't want to do is copy my bets, because, as you know, Nico, they never, ever win. But what could be good if you followed me on Dabble, whatever I'm betting on, just do the opposite and you'll probably be okay. Anyway, just to give you an idea of some of the figures here, some of the value of this company, Tabcorp invested 33 million, I should say, Australian dollars in 2022 in exchange for a 20% equity stake in Dabble. So at that time, a couple of years ago, it was valued at about 165 million Australian. Since then, Dabble's revenue has surged from an annualized $47 million in mid-2022 to $117 million for the 2024 financial year. So more than doubled, something like 250% growth in a couple of years, which is really impressive. Looking ahead, the company is projecting even more aggressive growth and expects revenue to exceed $200 million in financial year 25 and $500 million by financial year 27. Sometimes, Nico, I have to confess, I wonder if they just pluck these figures out of thin air. $500 million, let's go for it. But they're well on their way. So it did actually report an EBITDA loss of $9 million in FY24, but it has become profitable since then. So we see this a lot. New companies, they burn through a bit of cash in those first few years, Nico. But if the product actually chimes with customers and people really like it, then you can always turn that around and turn into a profitable operation. Now, all that, despite the fact that it only holds a 2% market share in Australia, but it does expect the figure to exceed 5% by 2027. You may remember last year, Dabble also entered the US with a daily fantasy offering, not sports betting, but it's all about the DFS over there. And the UK is also high on Dabble's priority list, with plans to launch here sometime in 2025. Apparently, they are also planning other international markets outside Australia, the US, and the UK, but those plans are less developed. Those are the ones that are on their immediate list, and they're also looking at Brazil and Canada, which are the most likely targets for future expansion. Now, in addition to an IPO, Dabble said it's exploring several other options for shareholder liquidity, including allowing shareholders to sell or transfer shares privately, as well as the possibility of selling the business. This is always a nice way. You can do it in a few different ways, Nico. Strategic review or thinking about an IPO, which basically is like putting a huge for sale sign in your window. Look at us, someone come and buy us. So who knows? I think we've had a huge cooling down of these IPOs in recent years. There was a SPAC boom, and companies like DraftKings getting listed, and all this was going on just a few years ago. Since then, I mean, we saw Supergroup went live on, I think it was on might be the New York Stock Exchange rather than the Nasdaq, and kind of entered the market at $8 a share or $10 a share, and immediately half of the value of that fell away. Didn't really go that well. We've had commentary from Rivalry in the past that maybe the cost and the effort associated with being publicly listed doesn't really kind of outweighs the value of that extra access to cash. So it does seem increasingly rare, Nico. Do you think an acquisition might be likelier for a young, plucky, upstart brand like Dabble who are doing things a bit differently, or do you think there is maybe an IPO on the cards here?
So first of all, and once again, shout out to Tim Heath, is an Australian investor and one of the founding entities of the YOLO Group. And they are, besides being invested into Next.io, obviously, paving the way also for other companies as well. And although it just seems little when Dabble is actually holding 2% of the market share in Australia, and they're expecting to increase this up to 5% by 2027. One thing is for sure, Australia is one of the biggest gambling markets in the world. So they obviously are doing quite well in Australia. So cash seems to be coming in, although they report an EBITDA loss of 9 million Australian dollars. But I'm pretty sure within the next period of time, they will increase, and they will just, get onto the positive side and positives when reporting actual wins and not losses. And then they are aiming, first of all, to the US. I don't see the US being an easy target. First of all, as we've seen a lot of companies, well-established companies in the US actually exiting the US. So the US doesn't come easy. And it seems like the US is just quite expensive graveyard for a lot of companies besides FanDuel and DraftKings, even Fanatics. And they also have a very well-established underlying product with their shipment of jerseys, etc. And as of now, we did not yet see big numbers from Fanatics Sports coming in. So entering the US and seeing this as an easy market or the next go-to market, I don't buy it. But having the idea of establishing something in Brazil, because in Brazil we will just see big time numbers, and I've already seen numbers from Brazil. We might do an episode on Brazil as well, but just hold that thought. But one thing is for sure, Brazil is one of the biggest markets out there with numbers you can't imagine. So I'm pretty sure if they would postpone, or not postpone because they are already live in the US, if they keep spendings in the US quite low and just refocus on Brazil, I'm pretty sure they will do very, very good. I just opened up an account at Dabble as soon as Tim Heath just announced his investment into Dabble as well. It's quite an interesting approach. It's engaging. And you just, can see and just follow all the good bettors as well. And just getting back to your statement of just follow me, do the quite opposite. One thing is for sure, you always state that you're not doing that well as soon as it comes to sports betting, but there's always a big time smile on your face as well. So keep that secret how well you're doing in sports betting. But I actually don't fall for your losing strategy, as you would never invest into something where you're just giving away money. But as said, just keep on to that story. And getting back to the point. So the approach is quite interesting, and it seems like they obviously hold assets with entering the socializing spectrum of sports betting as well, which has not yet been done in Brazil. And if they will be able to establish Dabble in Brazil, I'm pretty sure an IPO is just around the corner. And with the money you're getting from an IPO, maybe just invest into different South American markets as well as investing that money into the US. You could just pile up the whole cash, set it on fire like in Batman The Dark Knight Returns, shoot a video of this one, and I'm pretty sure this will hit your balance sheets even way more in a positive way than just investing the money into the US, as it's just a big numbers game, and FanDuel and DraftKings are all over the market there in the US.
Good analysis, Nico. Thank you very much. And I'm going to use our last 2 minutes to bring you some breaking news. This story is not yet live on Next.io, but I've got it in the background. And I can confirm that High Roller Technologies is aiming for an $8 per share initial public offering on the New York Stock Exchange. So just as we're discussing one IPO story and saying nobody's listing anymore in the gambling sector, somebody goes and does it as we speak. So High Roller Technologies, you heard it here first. Go and check out Next.io in 10 or 15 minutes when we get this story live, and we'll bring you all the details on that one. Nico, there's never a dull moment in this sector. There's always something happening. So we'll bring you the latest on that very shortly. Go and check it out on Next.io in just 10, 15 minutes. Make yourself a cup of tea, sit back, relax. And by the time your tea's cooled down enough to drink, this story will be ready for you to go and check it out. But that's all we've got time for. So there you go. That was an exciting last minute, wasn't it, Nico? We should say thank you once again to Hub 88 and to Playson, of course, for supporting us week in and week out. We should also say a heartfelt thanks to everybody for watching, and thank you very much for tuning in. We'll be back here at the same time, in the same place, just next week. And Nico, frankly, I already can't wait. I'm looking forward to it.
Yeah, me as well. And especially as next week on the 31st of October, it's the Halloween day, which is
Halloween
one of
special.
my most favorite days of the year, as I'm, US style decorating the house. And I will let Munich shine even brighter than it actually does. But be aware, it will be a lot of fun. Maybe we will come up with a special. You never know. You never know. One thing is for sure. We are covering an industry which never runs out of stories. And the both of us are always eager to actually let you know.
Absolutely right. Thank you very much, Nico. Sasha, in the comments, watch this space. We'll see you next week. Maybe we'll have a spooky costume for you. Fingers crossed. Thanks again, everybody, and we'll see you here same time next week.
Bye.
Bye.